Vaibhav. The today's session of Market Movers is going to be dedicated to the possible decline of USD. So here we will consider the USDJPY's trajectory, which increasingly looks bearish, and along with that, we will also talk about the Euro USD. If you consider the trading context for the day, we have this optimistic news flow coming in from vaccine makers. I think the Pfizer's CEO has spoken that there is strong possibility of vaccines being approved for emergency use by this year end. So we will have this possibility of at least one or multiple vaccines being available for inoculation by this year end and maybe earlier next year. So that has supported the equity segments. And after sell off in last week, we have now flat to positive momentum building up in most of the equity indices measures and even for the US equity futures. Now that the markets have also opened, we are seeing some positive moves there, and almost half of a percentage points of gains are being seen in the equity index measure for the US. The data docket was kind of empty for the day. We got these industrial production data. Apart from that, there was not much on the data docket. For the euro area, the industrial production has risen 4.1% in terms of month on month, whereas in terms of year on year, the industrial production is down 7.7%. So here it depends on which way you are looking at, and there is some recovery compared to the prior month in the month of July. But if we compare the July's numbers to the figures of July 2019, of course, we have declined as we have the pandemic raging through, and because of that, there is clamp down on the industrial activity, and as a result of that, the industrial production is down. So it will be interesting to see how next couple of months shape up. Now let's shift our attention to the technical outlook. Here we will first see the USD JPY and then we will move on to the Euro USD. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and for more than a week the USD JPY has been trading in a very narrow range of almost 50 pips, and as you can see, the range has been between 106 on the lower side to 106.5 on the upper side, and now it has broken on the lower side. So I feel that since we have the fresh break below this 106 zone, the possibility of it going to retest these prior swing lows around 105 has now risen, and we will see if there are fresh entry points which will offer us the optimum risk reward ratio as well. Here, from the daily time frame perspective, the trajectory has been, of course, bearish for the USD JPY for many weeks now, and after these two failed attempts to cross above these prior swing low areas, we saw the bearish stance again uh, getting prominent, and here we have this fresh sell-off resuming in the USD JPY. If you consider the 4 hourly chart, the regression curve is also pointing on the downside, and here from the pivot point series perspective, we have the break below this central pivot point which has acted as a near-term support for almost 2 weeks around this 106 zone. So both these pointers are pointing to the lower side, and I think now we have to use this central pivot point as our crucial marker here. And of course, the regression curve, as I said, is already bent on the lower side. So both these technical indicators are pointing to the upcoming weakness in the USD JPY, and if we have to target the immediate price zone works out closer to the these prior swing lows, and as I said, 105 can be an excellent target. But of course, we have to see what are the risks involved if we were to go for this trade, and I think for that to figure out the optimum levels, we will have to mostly rely on this lower time frame chart of the hourly time frame. Here we have this confluence zone of 50, 100 and 200 SMAs around 106.10 to 106.17. So in between these almost 10 pips, we have this strong resistance zone, and I think it is likely to pro strong resistance for USDJPY to cross above, and I feel as long as the USDJPY is trading below it, we have good possibility of making money if we go short on the USD But of course, we can also go wrong, and in that scenario, we need to have the stop loss level, which will reduce our losses in case our anticipation don't really work out and we end up making losses. So in that scenario, I think if you want to go for any fresh trade in the USD you should target this confluence zone of 50 and 100 SMAs, which is there around 106.10, and on the higher side we can keep the stop loss of around 106.40. So you will have the stop loss of around 30 pips in the USD and for the risk you are taking, you can target more than 1 is to 2 on the lower side if you are having an entry anywhere in between these 106.10 to 106.17 level. I would say that the target should work out below this low, and of course as per the 4 hourly low, which is there around 105.30, and even if you want to simply go for the risk reward ratio of 1 is to 2, even in that scenario we will have the target coming in around 105.50 to 105.40. So that can be the area which will be of particular interest for us, as it will provide us the risk reward ratio of 1 is to 2, and we will have our losses covered in case we end up on the wrong side, and we will be making good amount of money in case our anticipation turns out to be right. Euro USD is almost a similar story, but of course in the opposite direction. Here also, we are banking on the possibility of USD weakening and Euro getting stronger against the against the USD. So here on the daily time frame, we have seen Euro USD consolidating in this price band of 1.17 to 1.19, and on this chart of daily time frame, we have this consolidation happening between these important Fibonacci retracement levels. The Euro USD has been able to hold above this 38.2% Fibonacci retracement of its immediate rally, and I think unless and until we have any significant break, now the Euro USD has again started to rise, and it is probably going to target the prior swing high, which is there around 1.20. So looking at that possibility, we have to see if there are any opportunities to go on the buy trade for the buy trade on the long side, and if there are any emerging opportunities, of course we should profit from it. So in that sense, we have to watch out for these central pivot point of this month's pivot point series. We have the price zone of 1.186, which is going to be of crucial importance for us. The regression curve has now also bent on the upside, though slightly only. After this sideways momentum, here we have this consolidation phase in which these identical lows were made around 1.175, and then the swift turnaround happened closer to those levels, and here we are now seeing Euro USD consolidating closer to this central pivot point zone, and I feel if we see Euro USD being able to sustain itself above this central pivot point line, which has been acting as its immediate resistance for last two sessions, we will have the strong possibility of Euro USD continuing this break on the higher side, and in due course of time we can indeed expect it to get close to this prior swing high. So if that is going to be the case, I think we should go for any buy opportunity in the price band nearer to this 50 SMA zone. We have the 50 SMA around 1.184, and right now the price action is almost 30 to 40 pips away from that price zone. But if fortunately for us, if we see any correction happening in maybe in today's session or in next few session, and if we see the Euro USD getting close to this 50 SMA zone while holding well above this 200 SMA, we will have lot more reasons to believe that this is a trade for which we should go and take position. And on the low side, we can utilize this immediate swing low around 1.18 as our stop loss. Suppose if you are going in for the fresh trade anywhere in the price band of 1.184 to 1.185, I feel that the stop loss just little below 1.18 should be good enough. And as we have this confluence zone of 50, 100 and 200 SMAs hovering in between this 20-30 pips price band of 1.182 to 1.185, we will have strong possibility of Euro USD finding support if it happens to drop below. So if you see any sort of correction happening in the Euro USD, then I would say that first you should sit on the sidelines and see if it is able to sustain itself above this crucial support zone, and after due consolidation you can indeed get involved for the long trade in the Euro USD. And as I said, for the risk of around 40 to 50 pips, you can target almost 100 pips on the higher side, and we will be targeting the price zone pretty much close to 1.2, and that will give us the risk reward ratio will be which will be better than 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.